Yeah, I want to give a little update on the metals, but before I even do that, I'm going to say this. No financial advisor, just remember this. This is like pure common sense. No financial advisor that gets his livelihood by the amount of dollars he manages or getting you to buy certain funds is going to advise you to buy physical gold and silver or platinum and palladium. They're just not going to do that. There's absolutely no incentive for them to do that, other than maybe to tell you some garbage you want to hear if they understand that you won't go to them if they're like totally against metals. But they might tell you some garbage you want to hear. But no financial advisor is going to do that. And people like Warren Buffett and stuff, who was like totally against gold pretty much. He thinks it's a waste. He's probably buying it. He wants you to buy his Berkshire Hathaway. I don't know that for a fact, but hey, the best thing I can offer is some of the common sense things and curveballs to watch out for. I think that's really important because, if I knew the weekly movements on any commodity, I'd be like Richard and George Soros inside of a year. I don't know that. I can kind of like give some general stuff. I think silver and gold is going to hit another peak or an all-time high again in 2014. And then it's like off a ways, but it seems to be every 3 years if you look back, And this lull we're having right now could be something like what's going on in the 70s. And a lot of times they say in the 70s the manufacturing was better and stuff. Well, I don't know if these numbers are BS or not, but there's the manufacturing, the U.S. PMI rose to 52.3. So it beat the forecast. That's one of the bright spots in the economy. China is a little bit above 50. Germany did a little bit better. Yeah, China went to like 50.8 in May. I don't trust the Chinese numbers. I saw something where they have to have like all the different precincts or whatever the provinces in China report, and they showed all the numbers from each province, and they were much higher than what China reports as a whole. So like they're under like dictator pressure to like come up with nice rosy numbers. Even worse than in the United States. I don't trust any of these numbers, to tell you the truth, but that's what they are. But the other thing is, if you're showing good PMI going up, that should bring pressure on the metals. But then again, copper's been going down the last couple of years. Since 2011. So I just I hate throwing some of these numbers out here sometimes because I think they're BS. That's one reason I'm putting a lot of my angle on things as to what curveballs to watch out for and common sense, because it's probably giving you more of a real feel for what's going on. And gold and silver people that buy physical gold and silver, basically what they're betting on is a financial collapse. Basically, that's what Faber says. But it's not just because he says it. Basically, you're not playing the casino at all. Yeah, I know when the gold price goes down in dollars, you're losing money per se. But, the thing is, you're not putting all your money into precious metals. You're putting some of it in there. You might put most of it in there even, but you don't put all of it in there. Putting most of it in is high risk. That's what I do. But that's what I'm doing. But not all of it. And I remember when silver was going up, I was getting highly criticized for keeping fiat cash. And I'm like, it's like, man, you can't win for shit. I tell you the truth, but you don't go all out into one investment. That's always a fact. And but you're not buying physical silver and gold for like exactly like an investment. It's almost like when everything goes to crap, that's going to be your safety, and that's really what you're doing. You're waiting for that day to happen. I know it may never happen, right? But I think it is. Because the things that are going on, like with the debt in all the global, all the countries across the globe, especially in Japan, they're not going to be able to keep this up. And actually, in Japan, the Nikkei dropped 3.7%, and then it kind of recovered some. And like last week, it dropped like 7.5%. So it's about 17% off its highs in 2013. So when you're seeing that kind of like volatility, man, it's almost like something's teetering on the edge of a cliff. That's the way I look at it. Common sense 101. But it's like if everything was like real steady and it wasn't growing that much in the equities and stuff like that, and say Japan was going real steady growth, it's almost like they got their foot on the gas, and it's all because of the Bank of Japan doing super massive QE. As a matter of fact, that's what's going on in our own equities too. And I don't really trust these PMI numbers, to tell you the truth. It's probably more. It helps the markets when you say the PMI hit 52.3 and it beat expectations. But the United States numbers are probably as much BS as, maybe not quite as bad, as the Chinese numbers. Actually, if you look at the data in China, I think it is with the imports and exports, there's no way in hell is it jive with their PMI numbers and 7.5% growth rate they get each year. It's impossible. So, but that's the other reason the metals are down too, because actually manufacturing throughout the globe is not doing good, and there's not much pressure on buying things like silver. But the other thing is, looks like I don't. That's another question. Is the selling in the treasuries over? Like they had a massive sell-off, and caused the interest rates to go to, I think it was 2.235% on the 10-year bonds, and there was a massive sell-off in the 2-year treasuries, the 5-year treasuries, and the 10-year treasuries. All-time record volume last week. Now, the big question is that over with? I don't know, but it's like we're seeing like so much tumultuous things happening in the markets. One of the reasons you have the metals is for an event that really upsets the markets and brings them down. Because this is where I'm gonna put out something that I think right now, a little statement that I think really reflects what's going on. Commodities, and like say copper, Dr. Copper, but all commodities, metals and all this type of stuff, are linked to manufacturing of goods and services, right? I mean, that's simple logic, right? So if the mining sector is way, way, way down because there's not much demand for all these industrial metals because things aren't being produced as much, how the hell could the equities in the PMI be up? It might be that the reality of it, that's because the Fed is buying this stuff. Actually, if you look in Bloomberg, they'll tell you like the Fed's buying stuff. It's like they reveal it even in the major media. They don't say it a lot, but there's actually major media articles out there I saw that the Bank of Japan is buying equities and all this kind of shit. The Fed is buying equities. So that's causing the price to go up. That's what's keeping the price up. But probably more a reflection of what the real market would be is kind of how the miners are depressed right now. Because their policy is not to buy the miners. Policy is to buy other equities. So probably, if you think about it, manufacturing is, materials, raw materials and metals are needed for manufacturing. So, miners are down in copper, iron ore, the whole deal, all the way across the whole sector, right? That's really telling you what the actual global production and demand is. And it's probably reality that the PMI is a lot lower than this, 52.3 that they say the U.S. has, and the Chinese number is like 50 point something. And actually, I think it's actually the Chinese numbers fell to 49.2 from 50.4 in April, so they're around 50. And but the thing is, it's like those numbers are probably even lower than they're saying. You got to remember, they're under communist dictator families' pressure to come up with nice numbers all the time. So, that's telling me that the equities, without the Federal Reserve and all the Bank of Japan and all the other policies throughout all the central banks in the world, buying up equities, the markets would crash. And I personally think, if you go back to the 20s, I think it was like the bankers were keeping up the markets and then they withdrew their money and everybody lost their money. It's probably like setting up a trap right now, putting out these cute statistics that things aren't too bad, looking a little pretty good, and everybody's in there. And it's like, they're looking at the charts, like, to hit resistance here, and all of a sudden the bottom falls out. If the bottom falls out, gold might look good then. So that's basically what you're waiting for. A collapse of the whole system. And that's why you have the physical metals. Sounds like real doom and gloom, but that's probably what's going on. Because we got a totally rigged casino going on here. And the more electronic trading that's been developed, and the more software that's been developed, and there's more ways to cheat that have been developed in conjunction with all that. That's why you're outside the system, basically. Yeah, I know the metals are changed in dollars, and dollars is what you pay stuff for, but I think the game's going to unravel. So, like I said, I want to repeat that again. I think where the miners are, is probably closer to where the actual rest of the equities should be at. I mean, if PMI is supposedly good by the government statistics in, Germany or China and the United States, I know it went down a little bit in China, but it's probably a lot worse than that. If it's that good, there's like no growth. It's kind of like right in the middle. In the United States, it's showing good growth. If it's that good, that means there should be demand on copper, aluminum, iron ore, and all this type of stuff, and all those prices should be going up. They're not. That's why silver's not going up. It's an industrial metal. So, if there's not that much manufacturing out there, guess what? I mean, really, really, what does that mean? It means the rest of the equities are probably just being pumped up by the Federal Reserve policy. Now, are we insiders to know when they might pull the plug? No, we're not. That's why you've got metals. You're waiting for that day. Because when they pull the plug, and we saw back in the 30s the markets crashed. They could easily have even a 30% correction today. But you know what happened in the 30s? They had like a 90% correction. They might have a 50% correction in the equities. But for where the metals are right now, maybe they'll correct some, but they're not going to correct 50%. And if enough people get scared, that's probably where the buying pressure is going to be at. Now, I can't see the currencies themselves. And the other thing is, with currency wars, because every country is trying to boost its exports. Like, that's the whole reason behind Japan's policy. Every country is trying to boost its exports, and that's the whole reason behind their extreme QE policy to devalue the yen to make their products more cheaper out on other countries' markets so people will buy them. Well, every country is going to be doing that, devaluing their currencies. So how the hell could gold stay down and silver stay down under those circumstances? It really can't. So I think there are some shenanigans going on to actually hold the price down because, supposedly there's a sell-off in the market and all the professional traders are short, but people are buying the metals. When that happens, it's like, that shit don't add up. So somehow I think the bullshit's going to catch up with the professionals out there that are, playing the paper markets all the way. And, you think about it, between calculating taxes and all this professional cheating going on in the trading markets and stuff like that, and special software, these people actually aren't producing anything that anybody needs. And actually it comes down to 101. All that labor should be directed at, if it's high-end labor like intellectual labor, it should be at, engineering bridges, stresses on buildings and all that type of stuff. You have to do lots of calculations or cost accounting and that type of stuff, and efficiency of products or whatever. It shouldn't be wasted on calculating taxes and ways to cheat on a trading floor, right? So that's why I think the system's going to probably crap out eventually, and because basically a lot of these people are just a waste. They're an intelligent people that are a waste. That's really what it comes down to. So just again, I want to remind you that probably where the equities markets is probably closer to where the miners are right now. In reality, equities markets would probably be down that much if the Federal Reserve and the Bank of Japan was not buying equities. So the reason you're holding gold and silver is not so much as a dollar investment. I know it is going to work out that way, but it's because you have a fear of a collapse of the system itself. And with all the debt and everything like that, that's going to happen.